Everyone's after the rich.
China and the US are at the forefront of technological development.
Publicly traded bonds have been a horrendous investment for people this decade.
We need higher carbon prices.
Empirically, it's false that small guys can't win.
I think the idea that Russia's going to attack is nonsense.
You don't want to be invested in any asset class.
We predicted that there was going to be a war between Iran and Israel.
At the end of any investment strategy, however quantitative, there is a human being.
In futures, now we have a lot of math PhDs.
In my lifetime, India is unable to catch up with China.
There's massive privacy issues.
We're all subject to behavioral biases when we're investing.
The percentage of democracies in the world is declining.
It is all focused on the Pacific.
Another human being wants to yell at another human being. It's no fun yelling at an AI.
Everyone's after the wealthy. Why? Because we all need to raise money for the, burgeoning public sector in the West, and therefore you go after the people with money. You don't go after it from the poor. You go after it for the rich, and therefore you start to target them with all sorts of weird and wonderful ideas. And of course, eventually that drives the family to make more sort of cleverer tax planning decisions, which of course then feeds the lawyers' fees and the accountants' fees and so on and so forth.
Germany's economic model was to import cheap Russian energy, use that to do some clever manufacturing, and then export out to China, to simplify the model here. What's happened now is that they don't have that cost advantage on the energy side because they've had to switch away from cheap Russian energy. Instead, they're importing much more expensive US, Qatar, and Australian LNG. They've had to build terminals and so on, so that the cost of energy production has gone up. And then more generally, exports to China have gone down. That's partly because China is manufacturing a lot of stuff themselves. And in fact, China has become a huge car exporter. But also what you're seeing is German companies themselves are shifting production facilities to China.
Talking about the advantages of the US financial system and its openness, etc., there's clearly countries in the world that for this, that value this. But there's also countries around the world that are looking to carve out, they would like to ideally carve out their own sphere of influence, but I don't think that's possible because they, only China and the US are at the forefront of technological development in all areas. No one is anywhere near them to be able to offer a sort of a third pole.
If you're a war planner in Beijing who's been given the job of looking at the mission that we know that the PLA has been given of being able to take Taiwan, again, doesn't mean they will, but they have to be able to and ready to is their mission. You'll be looking at these factors all the time. There may come a point where they say, well, actually, we're not particularly ready to go, but the US is in disarray, Europe's in disarray, we're getting the green light from a few people that they wouldn't mind if it happened now. We've got options, we're sanction-proofed. But if we leave it a few years, the US will be more ready. They'll have their carrier groups maybe repositioned, they'll have new and improved weapon systems. They can counter some of our weapon systems. So our time of comparative advantage is now. And then you get the argument that if we don't go to war now, we might never be able to, and we'll lose that lever of power.
Bonds, publicly traded bonds, have been a horrendous investment for people this decade. So what are people doing, and how do they respond to that? The people who run these models are not going back and saying we should jettison fixed income, because that would call into question every input piece of advice they've given over the past 20 years. Rather, what they're saying is, can we find a form of fixed income where we can pretend that the world hasn't changed? That's private credit.
It's just empirically, it's false that small guys can't win. They absolutely can. If you're 10, 20, 40, 50 billion of AUM, almost all of the horsepower that you have is going into sort of maintaining a mediocre Sharp, because otherwise you're so big that you can't even maintain a mediocre Sharp. So all your fancy data sets, all your fancy execution capabilities, all your PhDs, and your product is like a 1 Sharp.
There is more demand for capital than there is supply of capital when it comes to this DeFi ecosystem, which means that if you're on the right side of it, the provider of capital, then there is demand, especially if you're a go-to player in the space. And then the risk you take is on this security side, which continuously goes down as a ratio because the industry is becoming more developed. There are more tools to protect, prevent, and catch malicious behavior.
The Middle Eastern countries like Egypt, Saudi, at the top level, they're kind of implicitly supporting Israel. they kind of have an economic relationship. But the people on the street are clearly on the Palestinian side. So if you have some change at the top, I mean, suddenly it opens up the whole region in a way that we didn't expect before.
Do people understand how much they're actually paying for this reduction in carbon emissions? And my impression is that no, they don't understand it.
There's no question that in order to meet our objectives, we need higher carbon prices. This probably does mean some impact on inflation on a flow-through basis, but that's just the way it is. There is a cost to do the transition.
The one objection, like that I make to myself and to my pitch about hedge funds is, if you believe that the world is going to be a very difficult place, financial markets-wise, you don't want to be invested in any asset class, basically. In my experience as an investor, making money with falling markets is very, very, very difficult. And also, it's even more difficult to realize these gains, even if you manage to make money on the short side. It's incredibly difficult to sell these investments at the right time.
If everyone moves to a CBDC and a cashless society, then suddenly the government has the ability to impose negative interest rates. They may feel that your diet is not good enough and you should be only having healthy food. They could technically alter the CBDC to you specifically, so you can only buy things from certain shops. There's massive privacy issues.
In the US already, 80% of the loans is originated by shadow banking, not by regulated banks. By the way, by shadow banking, I mean fintech platforms, I mean asset-based securities, warehouse facilities, funds, asset managers, right? So in the US, what I'm describing is kind of happening already.
I think the idea that Russia is going to move on and attack Lithuania or whoever is nonsense. But every time a Baltic president appears on television, he says that Russia is intent on recreating the Soviet Union. Now, that's nonsense. You know it's nonsense. I know it's nonsense. But they genuinely believe it.
Let's take two countries, India and China, the biggest countries. Let's assume they're growing at the same rate. India has always grown less than China. But India's population growth rate has been more than double, sometimes even 3 times that of China. So if the numerator is the same, GDP growth of two countries, but the population growth of India is double, India's GDP per capita growth staggers relative to China. And I've made statements in my own country, India, saying, in my lifetime, India is unable to catch up with China, irrespective of what you think.
I know for a fact that Cabinet Office in the UK are collecting data from social media of members of parliaments, and anything they're posting online is basically collected. Doesn't matter who they are, what level they are at, everything is collected. So that kind of information is what are you using it for, right? It's thematic analysis and also maybe surveillance.
So as these processes are taking place, this is where we get a chance to say, what did we get wrong? America is going through the same crisis. We have 50% of the American population that doesn't even have a pension. So if people are borrowing at high levels of interest rate to make their daily payments, and now you force them to auto-enroll in Nest and they get a 4% return on their investments, that's a terrible thing because you made them poorer.
At the end of any investment strategy, however quantitative, there is a human being. And that human being remains a human being. All those things you discussed, they will stay with us for a long time. And yes, stories sell.
Part of our success, right, is that most of the people who invest with us can honestly relate more to me than an engineer who's running a CTA.
At Hugo, I think we have one of the highest Reform UK shares. And at the minute, it's just not translating down to the ballot box. We're just not seeing a party that is at sort of 16% or whatever it is in the polls, going out there and winning council seats or winning or pushing really hard in by-elections, which is, of course, what UKIP did in the sort of the 2013 to 2016 era. They put on some really impressive performances. They were winning, 100 councillors in local authority elections. The Reform UK and the most recent ones just won 2. If the Reform UK are going to really compete in some constituencies or really going to start returning some MPs, We need to be seeing them on 30, 35, 40% in some constituencies. And we're just not seeing that.
In futures, now we have a lot of math PhDs, but for a long time it was really a trading background, coming from the pit, not well educated. The equity world was always, very aristocratic, or even the fixed income was a very technical. You need to know math, and so it would attract, the grads of the best universities to a certain extent. And so I think there's a lot of that in the end. I don't come across a lot of, Ivy League, MBAs, in the futures world, they tend to be at, some equity hedge funds or foundations, stuff like this. And so there's a little bit of that. I don't think it's the main reason, but I think there's a little bit of that. Futures tend to be a more cowboy style, it was the agricultural people hedging their crops and stuff like this.
You cannot have an unelected bureaucrat sitting in the Bank of England regulate the behavior or the conduct of the Chancellor of the Exchequer or the Prime Minister. It is not acceptable in a democratic society, because the central bank ultimately is a non-democratic institution. But if the roots of the crisis or the biggest problems are caused by the politicians, then it's an unregulatable type of behavior. So what you end up is the Bank of England and the other macro-pro authorities regulating what they can regulate, but because they have to leave out the biggest risk factors, it's a very big ingredient in my illusion of control.
If you are elected, you are fighting for the median voter, and the median voter is exactly the person you want to take care of, and therefore you don't want him to go bankrupt. Therefore, you're going to do exactly the same thing, exactly because, not despite, exactly because you are an elected official.
Aging and thinking about, well, what strengthens my grasp on the power, right? What strengthens legitimacy, make it easier for me to have more control. If sort of Taiwan declares independence and they kind of go, okay, well, we're too weak and the US supports that, and so there's nothing I can do, right? So they cannot be viewed as sort of weak. And so they have to have a credible threat in saying, look, if you declare independence, right, some very, very horrible things is going to happen to you. And it just doesn't matter what the US says. So we're willing to go to extreme pain and self-harming to make it so painful that you don't do it, right? That's like the only thing they have to do, because it's the only unacceptable outcome. If they if they integrate Taiwan, does that strengthen their legitimacy? No, because I'm sure the integration is costly, expensive, it's fraught with challenge, it unmasks, the incompatibility between a democracy and a one-party state, right? I mean, it's much messier.
After people lose money in the equity markets, they get frozen, they do nothing. They are unable to move. They will not allocate to hedge funds, which would diversify their portfolios. They would basically nothing. They just sit tight and wait.
The percentage of democracies in the world is declining, while the number of autocracies is increasing, because the definition of democracy, it needs to be understood. Elections don't guarantee a democracy. You vote also in autocratic regimes. It's the freedom of press and independence of the judiciary that define liberal democracies.
The next generation will not only inherit a lot of wealth from wealthy parents, but of course will be in the auto-enrollment systems and will have started, I think, psychologically understanding that you have to start making some provision much earlier on in your career. But I think there is a mid-generational problem of people who simply haven't and can't now make enough provision.
Yeah, they don't have an incentive to do so.
It's too late to introduce some sort of tax incentive. And it is, of course, a function of the political system. It is a very easy issue actually to hide, because you're off to the next election and it is always somebody else's problem.
Did I hear you correctly that practically you suggested that there is a possibility of systemic risk events coming out of multi-strategy funds?
I think there is, and I think that we saw that in March 2020. I mean, you could take the other side of that and say their trading is so large that the central banks would always have to bail out these trades in those types of scenarios, and that's effectively what we saw in COVID. But I suppose my point is we don't know, because the landscape in terms of their assets has shifted so quickly that it would be in the back of my mind as a possible risk.
Another human being wants to yell at another human being. It's no fun yelling at an AI. Why did you make that allocation? That was ridiculous. Don't put any mortgages in the portfolio anymore. It's no fun yelling at ChatGPT. You don't get that response back.
I'm sure you can teach AI to yell at you back.